Was I the only one pulling for the Canadian women's soccer team? I feel bad pulling against the U.S., but some of them old gals, just drive me nuts. Especially that pink-haired gal. Anyway, don't want to talk about politics or the Olympics today, though. I'll tell you this. Farming is hard, y'all. Y'all know I got my little farm. And yesterday, my little goat was in labor, and she was not able to have the little baby goat. And so we took her to the vet, an emergency vet. And unfortunately, the baby goat did not make it, but our goat, she's going to be just fine. But it's just tough. I thought, oh my goodness, I could handle this. I thought I'd be able to, help deliver and all that, but I did not do good. I used to deliver pigs when I was a teenager, but it's hard, having a death on the farm. And then the neighbor's dog, people around here laugh at me about my chickens, but I love my chickens and my roosters, and I've been chased by my roosters, and I finally got them tamed down a little bit where they don't kill me. And the neighbor's doggone it, came and pulled one of my majestic, beautiful black copper Moran's roosters through the fence and just bloodied him up, and he had to be put down, my little rooster, yesterday. And I was sitting there going, this animal that has attacked me has run me all over the yard, wouldn't let me get into my mama's car. And here I am, laying on his deathbed beside the little joker, and just my heart was ripped out yesterday. So this farming stuff is hard. Doesn't matter if it's, so now the neighbor's dog has killed 3 of my chickens. Well, 2 chickens, 2 roosters, a turkey, and he's snapping at my pigs. And I'm just so upset this morning. I had trouble sleeping, thinking about all my animals that's, going down, and it's been tough, tough kind of day on the farm. And today's a strange day as well. I've got a interview with University of Alabama, y'all. Isn't that cool? So that's why I ain't got my spam hat on today. I'm thinking about wearing my spam hat for the interview, though, so we'll see. We'll see how that goes today. I'm afraid they're going to want me to teach more courses than I want to. I'd like to teach like one class. I don't want to teach a whole semester and be busy and, writing lesson plans and teaching all the time. So we'll see what we can do, see if we can scoot into Alabama a little bit as a professor, because that would be a childhood dream, right? I mean, you work at the school that is my football team. That'd be so cool. So we'll see how that goes. So I hope y'all having a great day. Listen, we got Rod with us. We got Short Vol with us. Stacy, you're on your iPhone. What's up with you, girl? Where you at? You traveling to exotic locales? What are you doing?
We are headed to Alabama to take care of the grandbaby while our daughter and son-in-law take their first weekend away.
Oh my!
First weekend away in 9 months. So
hey, where y'all going, near Mobile?
Yes.
Oh,
yes. He's the one that's in the Coast Guard in Mobile.
Yeah. Oh,
so we're
fun.
In the car.
Oh, that is awesome. Well, I want you to reach over and give your husband a big old kiss and tell him that's from Bobby.
I'll tell him. Okay.
Well, y'all be careful on the road. Well, this is fun, y'all. This is gonna be a fun day. So I'm gonna get over all my animal dying and stuff. Sorry to get y'all down by that, but it's just weighs on me. And how can I protect my little animals? And I got donkeys now, and the miniature donkeys who I want to name Elb and Flo. Beth put a kibosh on that. Oh, how much of my freedoms did I give up when I married that woman? She won't let me do anything. I can't even name the animals around here. Every name I come up with is not good enough. So I wanted to name the donkeys Elb and Flo after the movements of the market, but she shot that down. My second pair of names has also been shot down is Clovis and Maybelle. So it's a mama and daughter pair. But I often asked, why do people have donkeys, right? What do you do with them? And what they do is they will kill a fox or they'll kill a coyote in a heartbeat. And you can go to YouTube and look at videos. What they do is they kick them and they'll kill them. I mean, just kick a coyote in the head and kill it. So they're kind of, a predator deterrent for the rest of my pigs and ducks and chickens and all the stuff that I got going on. But So I hope they'll kick in and do something. Well, let's get on the market. Enough about my farm, enough about all this. Y'all's time is valuable. We got Stacy in the car headed to the great state of Alabama. Y'all, last month was a hard month for me trading, right? In the Tastyworks account, that is the first month that had a losing month. Let's look at it. So it had a losing month last month. We lost $175 on the account, but it's right now almost at all-time highs again. Just a couple of guided action that we're getting right now. It's down a day, it's up, it's down and up. This is good stuff. This is what I call shooting fish in a barrel. So you got the barrel, you got 50 gallons of water in it, and there's catfish all in it. And all you got to do is bring your 22 rifle and pop up catfish in the head. As soon as I start getting cocky like that, that's when all things go to crap. We've seen that with me. But let's just see what the market's doing. All left me yesterday because I had my loan, $1.80. It automatically filled. So now I've got 9 tranches of the Black Swan hedge. 9, y'all. Let's bring it over here. So let's see what it looked like. Where can I find it, Bob? Okay, BSH hedges. Yeah, here it is, hedges. So now I've got 9 complete hedges in my idea is since the market was still down yesterday, even though I got filled on my loans, I went ahead and sold another 3. So now I've got 30 short puts in the portfolio, 27 from the BSH plus the 3 SO, 30. And I've got 45 long puts in the Black Swan hedge. I also keep up with my total cost. So I've received credits of $5,335, and I have bought options for $5,744. As of right now, including all debits and credits, is $408.90. Notice that your spreadsheet also keeps up with the average days to complete the hedge. So on average, it's taking me a little over 2 weeks to complete the hedge. So we sold 3 yesterday. So in 15 more days, I would expect to buy back the loans. Sold those, I think, for $325. Yep. So we've got a calculator that'll tell us our profits on it. I sold it for $325. I will harvest those $325 puts when I can close them and buy them back for 20 cents. And now Bobby's getting a little bit too big for his britches, right? Because now I know I'm about to break even. I'm starting to put these on for income trades. So now I'm moving this instead of maybe what would be the break even, $1.80 or so. Let's see, $1.80 would make that. I'd be a $12 loss, so maybe $1.75 or so, $1.75. That would make that. Yeah, the overall trade cost me 2 cents. So instead of me putting on, getting my loans at $1.70 to make that a credit, just a slight credit, right? So that would be a $12 credit. I'm going and saying I'm gonna get a little cocky because I'm about to close some of these short puts. So I'm gonna move that to make me $62 for a free hedge, and I'll get a credit at the end of the whole thing, even after the harvest. Now that's cool. That's what we want to do. And you can do that when you're starting to harvest some of these short puts at $1.50. This was at 305 yesterday. So now that's going down from 305 to 280. Notice, y'all, we are close to harvesting the 12 shorts on that. Those are another good uptick in the market, and those might fill today. Might even fill while we're on our session together. So, and then what happens the next day that we get a downward move of, say, 0.4% or greater in the market? Well, what am I going to do then? I'm going to sell another 3 puts to start another tranche. Or because I'll have these 15 taken off short puts, I could even sell 6 short puts maybe next time, or 9. So you see how you're all of a sudden we're scaling this up because we want that wall that I've showed you constantly on the Analyze tab. We want it to be straight up, baby. So if we get a crash in the market, you and I are going to just be in a really, really good place. So yesterday also, I think after we left, I put on my 4th 111 trade, which actually was a 333 trade, and that thing's doing nicely as well. So it's up 1950, so doing really, really well. Now, what I wanted to do is today is normally a day that we go through the Bain program and show you that, but I'm telling you, I got a lot of big green monsters that I've got to draw, and I don't think you want to sit here and watch me draw big green, or maybe you do. We can certainly do it, draw big green monsters for the full hour. So I've got to take some time to make sure that we do that. Also put on a RIC trade yesterday. So the RIC trade is up. So we'll try to hold that into expiration tomorrow. But what I thought we would do today is just go through the trades that we have been putting on, all year, and make sure that you understand how to put on each and every one of them. Okay. So let's first talk about the Vix Hedge. The Vix Hedge is a trade, and it's in your spreadsheet as well. So I've got one called Vix Hedge. So what you do is you buy around a 10 delta VIX call at around 120 days to expiration with 0.25% of your total portfolio. Rinse and repeat every 30 days so that you ultimately have calls in the 120, 90, 60, and 30-day areas. Let them expire under normal market conditions. Alternatively, instead of buying multiple contracts, a closer to the money call could be purchased with the proceeds. So right now in this account, it's saying that 0.25% of your portfolio is around, I hadn't updated the net lately, but it's probably close to that. So around $124 at about 120 days out. So don't do 2.5% of your portfolio. So let's do that number, make sure you see where we're getting it. So what you do is you take your portfolio balance. So let's pretend we're taking the 49,682 in this account, 49,682, okay? And then you're gonna multiply that by 0.0025, not 0.25, right? 0.0025, and that comes up with 124 bucks. So in this account, we could expend 124 bucks. Now, we have not bought that recently because we really didn't need it, and the market had been going down and VIX was going up. So let's see what VIX is doing today. So we got $124 to spend. Let's see where our expirations are in VIX. So everybody knows how to put on the Vix Hedge. Go to VIX, and you want to put it on a day when VIX is down. That's what we want. We want VIX to be lower when we go into this. So what would we do? So you see I've got positions in the 12, 40, and 75. I did not put one when this was 120, but I could do that now, right? I could easily go ahead and do it in the 103 so that I can kind of even all these up. So I got 12, 40, 75. We could put one here. I could spend 124 bucks. Probably better to do it at 120 days, but I didn't. So what we're doing is we're actually going and looking at about the 10 delta. Now you say, Bobby, you're actually looking at delta, aren't you? I am, because normally I look at probability of in the money. I do that on everything but VIX. On VIX, I actually do look at the delta. So here's the 10 delta. We got $124 to spend. So it's going to cost me $55. So would I buy 2 or 3? I'm probably going to buy 2. Get that for 100 bucks. So it cost me $101.44 on the 10 delta call. So if we got 50, work, not filled, we'll go for 55. Don't try to be a hero, right? Here they are. Cancel, replace. We'll move you up to 55. But now we should get filled. I said now we should get filled. There we go. All right, so now we are filled. What does this look like? So let's go to here. Let's go to VIX. VIX. See what this whole thing looks like. I say we'll go to VIX. Look at that, y'all. Isn't that beautiful? Isn't that gorgeous? So remember what we normally do on these things. We look at the vol step. Oftentimes, what if we get a crash? What happens? These things look gorgeous. There you are, baby. So here we are at VIX of 17 or so. So what happens if VIX were to go up 30? You're up, between 1,700 and 2,700. What happens if VIX goes up here? You're up 4,000 to 6,000 bucks. What if we get VIX 50? You're up 10,000 bucks, potentially. Now, what happens if we go through another coronavirus crash that happened in March? So VIX went up to 80, didn't it? So what happens if we get VIX up to 80? Shaboot, shaboot, we're up. What's it? 27,000, 24,000 on just a couple contracts, right? So really, really cool stuff here of having the Vix Hedge in. All right, any questions on the Vix Hedge at all? We do it every 30 days, just put it on. So if you've got a $50,000 account and you're doing, let's just put it in a number. If you're doing a $50,000 account and you do this every 30 days and you put in 0.0025% of your account, then that's going to cost you 3% of your net lick over a year. So what's 3% of that? So you could lose 1,500 from the Vix Hedge. So you got to keep that in mind. During most times, you'll lose that money. Most times, you're not going to even need that. You're just going to lose it. It's part of doing business. The great thing about you and I as traders, we don't have office expenses. Well, maybe we do. I'm in my home office in my bedroom, this downstairs. But, other than the electricity I have and me paying data fees that I have to pay to Thinkorswim and, a couple of other minor expenses, I mean, what a great business that is. So can you imagine paying your insurance for $1,500 a year on 50,000? That's not bad. And it allows me to do all the other stuff that we do. So that's the Vix Hedge. That's one of the hedges that we do. All right, now let's talk about the second trade that we get on other videos that you'll see, but just let you know what we do on the Black Swan hedge. Let's talk about it. So let's go to the Analyze tab and let's let you see the Black Swan hedge, because now I'm looking really, really good on my Black Swan hedge. So let's go to ES. I say let's go to ES. The new computer's coming tomorrow, y'all, supposedly from Canada. We shall see. All right, so Black Swan hedge. Let's hide everything else that we got here. Just want you to see the hedges. So we'll go not to show all. We'll go to hide simulations. Now we'll go make sure we got everything checked, and single symbol is good. But I do have in some space strip trades. So let me take the space strip trades out so you can see this beautiful, beautiful hedge. Out 7, 10, 6, 6. All righty, here we go. So here's what our Black Swan hedge looks like. We've got 7 price slices here. So if we go down 20% in the market, that's always where I'm looking. I like to look at 12% down and 20% down. If we go 20% down, it says that my Black Swan hedges will make me $2,206. Yay! But that does not take into account volatility. So at that 35.29, I'm always looking to see what would happen, Bob. How would that look? Move this over. And that would be this 35.30 right here. So the cool thing is, with my Black Swan hedges, y'all, I would be up. Here it is. No, that's not it, is it? Hold on. Let me condense this down, pull it up. 35.30 right here. So we're going to be up between 36 and 56,000 on the Black Swan hedge. How much did that hedge cost me? That hedge has cost me, I say the hedge has cost me $408.90. Now, is that sweet or what? Now, what's this? I think I showed you this yesterday. And 3. Everybody said when that happens, this is what's sweet, y'all. What's this? So let's take out, if it were to go down, going up, 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 up. Look, it's got a $700,000 there. And that's sweet. So let's go and take out the 12 and the 3. So if we take out these 12 shorts that are about to be harvested, and we take out the other 3 here that are about to be harvested, what's it go up? So now instead of that being up 36 to 55,000, we're up, follow the numbers over here. We are up on our hedge, 83,000 to 125,000. These are estimates, right? Depending on what volatility does. If the VIX gets up to say 60 to 75, then we're going to be up big, big, big. So we use the ebb and flow of the market to put these things on. So yesterday the market was down and then went up. The market was down for the day though. I sold my 3. So we don't necessarily have to go into that. If I'm ever to do today. Now, what you could do is you can buy full-blown tranches of the Black Swan hedge if you want to just get started. It costs us a couple $1,000s, but we're sitting in a really, really nice place with all of our hedges. There's nothing for me to do on my Black Swan hedge today. I'm just waiting for GTC, good till cancel orders, to close stronger, because we want this thing to go boom up like this. And the way you do it is through building the wall, baby. We are building the wall. It's a beautiful trade. All right, someone said something in chat. Oh, congratulations and good luck. Thank you, Rod. I appreciate that. We'll see how that goes today. That's why I actually look. I even brushed my hair today. No spam hat, and I hadn't shaved fully, but I did take the electric razor and just kind of pop some of that off today. All right, so that's the Black Swan hedge. Now let me show you something else. Okay. Now let's show you some other stuff that we got. And I'm going to show you the space strip trades that we have. Space strip trades. Space strip trades, we're going to take it off vol because that really doesn't. Let's see if I can show you all together first. We've got 2 of these on. And these are the space strip trades. So the first space strip trade on, see what it looks like. Now, why do we have a space strip trade on? You're perhaps asking. Well, we're protection. But the Black Swan hedge does nothing really if the market just grinds down slowly. So we need some protection in the event that the market on. And that's kind of cool. So what happens is over time your TZ builds up into this little tent area and it makes a little hump like that. And then once over, it doesn't matter if the market goes down, perhaps we could be as up as the maximum profit contract. And I've shown you this before, but it bears repeating. If we move the days out, what's the purple line? Because the purple line, what's this little purple line? Hope you can see it. See it? See it raising its little head up? Isn't it pretty? So then you go, if we're on a month from today, say September the 6th, current market, that's down 5, here's 12% down. Market goes down 12%, we're up $1,036 on that hedge. What's the number over there? The purple number would be 1,036, 1123. So we put these little trades in so that we can build this little profit hunt. Now let's see our other one. Let's see them both together because you kind of layer these trades in. So let's see the other trade is another space trip trade, 10-10-6-6. Here we go. Now we got two of them. So we've got this one that's a little closer to the money. And check out our second one is a little farther from the money. That's sweet. So what are we doing? We're putting these things on so that we build a little inventory of hedges to the downside that help us on gradual little hedges to the downside. So check this out. Remember, we were up $1,100. So this one we're up $2,200. Things being equal, if price kind of teeter-totters around where it's at, and the next day price goes boom. Because then you don't have that profit in there. What do we got? We got the black swan hedge cooking this up. Now, I like these trades, but I do kind of live for a while. We'll take them off probably about with 21 days left to go in these trades. They're long-term trades. Let that profit build up in there. And then we'll probably not do a lot of commission involved in those. 10 contracts, 20 contracts, 32 contracts altogether. Kind of a, intensive type thing. So what have we replaced this week? We've got to have a replacement, right? Because we go 1-1-1 trades. Let's show you those. We're trying to go through every trade that we do so everybody kind of gets a feel for what we're doing those. So let's look at putting those at price slices are just the same. Okay. There's two different trades that I trade with the micros. We do the daily selling of a micro put and trade, which looks like a 2-2-2 trade. And I do that intentionally so that I don't cross up the strikes. Oh my gosh, we got 3s and 2s and all kinds of stuff. Let me just take out all the negative ones because we know the negative ones are our income trades that we just sell the daily put in MES. Let's just take those out. Take out all negative ones so y'all can see exactly what our 1-1-1s look like. 2, 3. Okay. See what's down hiding over here. There. So I'm going to take you out now. So I think I've isolated it to my single symbol of my 1-1-1 trades. Now, isn't that kind of cool, huh? Kind of a similar structure, but so that's showing the profit hump as well on September the 6th. But let's start out seeing what it looks like. So here we are today, right? So our trade is profitable. So right now on the open, we are up on all of these trades, $227. Very, very nice. That's why I like this trade already. When we go into here, we have the $100 real line. Let's move it out to September 6th again and see that hump, the profit hump that develops on the downside. And then we'll go to September and pop up as a profit hump. Now it looks like we lost some of our 1-1-2 expiration, or when that short put gets to 100% profit, there's a short put down here at the bottom. We can take that off. So let's just see how those are doing, and then I'm going to show you how to put on that trade. So let's look at them. So I put on a third. Let's see what that looks like. The third one of the, oh man, so where's my strikes at? Is that not showing me my stuff? Anyway, that one's up $30, $92. And then what you could do is say, hey man, when that short put that I sold that here, the lower, so take that baby off. Or I could take it off sooner as well, right? I mean, you got options there, make that even stronger. But we'll just let that go. I don't see an impending crash coming. Here's the great, let's see what percentage that short strike is. It's at 55% profit. Let's go the fourth. All right, now let's build these and show you how to do them. And we give mighty, mighty big thanks to Tom. He's the one that brought this trade to us, and I like it. All right, so you can put it on in SPY. I don't put it on in SPY, though, because it takes a lot more buying power. So what you do is go to the trade tab. You're going to go closest to 45 days. And we're going to start off with a long put vertical. This 50-point wide, which is 43.50. And I hate overlapping my strike because right now you see that 50-point wide is going for $14. We want to do the one that we can do for $10, buy for $10. So we're going to move our strikes to move. Hold on. Make sure I got both of them selected. There we go. Now we'll move our strikes down to get that to about, it's still not doing this. 40, 30, 12.50 there. Oh, they all move at the same time. There we go. 11.75, $11. Go one more, 10.50. We're getting close. Look at there, y'all. 43, 40, 42.90 for $10. Then you want to go down and find the one that'll finance the purchase of this debit spread. So let's go down and look at one that we can sell for $20. So on the sale, we're looking at the bid, and here it is. Putting this trade on for a debit, we can put it on for a credit, for $10 credit. Now, Tastyworks won't let you route this trade. And notice that I've got 246 deltas already, and the micros are up. Try to be cute, and I'm going to do something that I don't want y'all to do, but I'm going to do it because I could stand a little bit of negative delta. I've got positive theta. So what I'm going to do is on an update, I'm going to use the ebb and fish in a barrel. So I'm going to delete the short leg, and all I'm going to do is put on the long leg. I'm going to put on the 43.40, 42.9 at 10, and I'm going to probably do, how much buying power I got? I got a ton. I'm probably going to do 3 of these on this update. So let's, didn't really change the buying power at all, did it? Isn't that interesting? So we'll put that on for 10.25. Let's work that. So we got a put delta. It's giving me $100. Max loss is $150. Not taking a lot of it. So let's try that. See if we get filled. Fill me, Seymour. Nothing. Working. Replace order. I really don't want to go up. And we're filled. All right, so we'll make sure everybody knows what we're doing. Why did I do just this part of it today? Because on up days, you sell puts on down days. You sell calls on up days. I have to think about it, close my eyes. You sell calls on up days, and you buy calls on down days. We're using the ebb and flow of the market to make our decisions. Now, in my heart of hearts now, I got to make me a down day. I'm going to finance what I just bought. I do not buy options unless I pay for it somewhere by selling options. So we're going to want to do something to cover the cost of that. Of late, we've been getting some two-sided action. So now I want to go to the activity tab. That was the, y'all help me remember, 43.40, 42.90, 43.40, 42. Let's put it on here. And here I'm going to show you where I'm going to put my little note. So we're going to trade the micros. Trade the micros. Going to go 43 days out. What did we say it was? 43.40, 43.40, 42.9. 43.40. Here we go. Now look at there. Isn't that interesting? 43.40. So I've got some positions already. I've got them layered in here everywhere, right? So this time we're going to go to buy the 43.40. And we're going to say, I don't have any options there, so we'll sell that. Spoon. Okay. 10.25 is the debit. And I want y'all to see something first. Let's make this 3 contracts. Let's take her to the Analyze tab. Analyze. Trade. So now we want to hide positions and just show you the simulations. So what does a put debit spread look like? Make sure that's the only one we got. Yep. Put her back. There she is. Ain't she pretty? So here we are at current price. If the market sellers, yay! But if the market goes down, we got a nice little. If it's slow, $196. If we go down, so the market's up today. If it keeps going up, we're going to lose $153. If the market goes like it a lot, so let's confirm and send it. Come on, baby, fill me. Yep, and we're filled. All right, now let's go identify the short that we should have sold, the $20 short. So now I'm having to make some notes, right? Sell the one that's going to take us $20. So that would be the 4010. Right? So the 4010 would fully finance that and give us about $10 extra. All right, so what I'm going to do is remember 4010, and then we're going to go out here to the monitor tab. Should be the 3.3 that we just bought. So control key. I'm going to right click. I'm going to move this to a grid. 111. It's confusing, doesn't it? 111. I'm going to put me a note out to the side telling me to buy the, what was it, 4010? Or sell the 4010, sorry. Sell the 4010. All right. So within my group now, I have this, see that this 111 is not complete. Back in on a down day and sell the 4010. And what we're hoping is when we do that and sell the 4010, on a day that the market, we might be able to sneak out, $25, $24, $23 instead. So I'm using the moves in the market to help me make my decisions. Well, if we don't get a down day, well, maybe I don't sell that. And it was a dumb move on my part because I was not able to finance the purchase of that. But with the market doing what it's been doing lately, we've been getting some, decent two-sided action. I could sell the 4010 for maybe, $22 on a good down day and collect a little more premium, or I could even go out the one that on the down day, this 1875 or 1925 may be selling for 20 because these premiums will increase as the market goes down. So I could move that out to a safer short put, right, farther away from the money and collect equal credit that I could today on the point that you're able to use ebb and flow. It is shooting fish in a barrel. That's what it feels like. That's the only thing I can relate it to. Those are good days when you get in two-sided action. So you goes up, that's when you buy puts. That's when you sell calls. Market goes down, you sell puts, and you do the opposite on calls, right? Buy calls. So use the ebb and flow to make those types of trading decisions. All right, anyone got a question on the 111? Y'all are quiet today. So we got the 111. All right, now I said that, let's see, I'll make sure we go through all the trades that we got. So we've gone through the Vix Hedge. We've gone through the space trips, which I'm probably not. We've talked about the Black Swan Hedge. Hadn't really gone into the details yet, but we will when we put on our next one. Micro short puts. Let's talk about the micro short puts. So I've been a little bit more selective. I only do every day. Normally I sell puts every day, even on up. So I've been a little more selective this time. And we look at the market and we sell puts. We sell a put every day. What I do is I go closest to 60 days, 10 delta put. Now, on my original spreadsheet that we started off on in December, if y'all got the old spreadsheet, it'll tell you the recommended delta depending on volatility level that you should sell. But generally, I'm more comfortable, it'll go all the way up to a 30 delta. I'll sell those sometimes, but most of the time I like selling the 10 delta. And then when you get enough of these on, come on, put one on, take one on. It's really fun, right? Because you go percent. So I've only got what, 1, 2, 3, 4, 5, 6. Got 6 of these on. So what might I use to make my market? Oh, wow, look, we got just a little bit of pullback, right? Now's the time. Now this market, look at this. The AD line is starting to pick up. That means prices. So let's go trade this one. Micros, I go closest to 60 days. I go to 10 delta. No probability of being in the money. Old habits hard to die. Call it delta. We can pull up 1825 there. We're going to try 1850 and see if we get chaboom, chaboom. Come on, baby, feel me. No, jack squat crap. We'll get filled on it. So there she is. We'll put it in 18 and a quarter. Bringing in $90 a premium. Chaboom, chaboom. But I wanted to do that. But what I also wanted to show you is one of the things you could do is bring up our big green monster. And that's on volume profile. Here's how I make, trading decisions. What do I see in the market? And we're going to put this to ES. MES, ES, they trade exactly the same. So here's what I'm seeing in the market. Why would I sell a put on a day when the market is up 0.34? I'll tell you why. Because that put is way on down here, isn't it? I forget which one it is. What was the strike? We sold the 38.20. Probably not even on our chart. 38.20 is not on our chart. Look at that. It is way down here. I mean, it is a 90% plus probability of expiring. Volume profile shows me that this is the area that volume's traded most in the last 10 days. It acts as a magnet toward price. If volume was traded here, number of contracts, people get used to that. They like this, a lot of activity around this area. Check here and trades in here for a while. What's going to happen? See this long bar in this bar. And if that happens, then the point of control would move from this strike to that strike, right? So I see that point of control, but in doing so, there's a good chance that that point of control moves to here, which is higher than what we are today, near the 50% line. So price is above the 20 and 50 exponential moving average on a 10-day, 30-minute chart. That's what I base my trades on, primarily this chart. So I think a short put trade way down here in the 3,800s. I am shooting fish in the barrel by doing that. Hey, Bob, what happens though, man, if we get a big old 15, 20% move in the market down, Mr. Bobby Genius? Well, guess what? I've got Black Swan hedges making me what, 50, 70,000, whatever it was, against those short income trades. And chances are I'll take off my micros, before we get to that crash. I'd probably manage on some, take those off. Isn't that beautiful? Shooting fish in a barrel. That's what we're doing, y'all. Shooting fish in a barrel. All right, any questions on selling that put? Isn't it great? So that's a high trade. And that's why I said in our Discord chat yesterday, Tom was talking about doing that trade. And that's one that Tom enjoys doing as well. A lot of you probably are selling those puts as well. You got to keep in mind it's span margin. And we don't talk about it enough, but span margin means you can put these on for nearly no margin. It may take you, $300-400 in buying power to do so. Span margin goes to crap though when the market goes down, and you'll see, it could take huge amounts of margin for you to put these on. But the great thing about Thinkorswim is they realize I've got all these huge hedges to the downside, and so that's why it's not costing me a lot of margin with these trades, even though it is on span margin. So it all kind of weighs in, but you kind of need to familiarize yourself with span margin. And if you're trading futures, as I love trading, those can, become substantial. What takes $400 buying power today could be $5,000 buying power tomorrow. You just got to be aware of those risks. But from my point of view, and I always hate to get, where I start getting cocky like a banny hen that, that's when things normally go wrong for me. So we did sell a put today, shooting fish in a barrel. Everything that we've been using as a tool is the skew driver to tell us what the market direction is going to be. So let's pull that up, see if it'll work today. Any questions on selling the puts? That's what I did in 2016, where I remember 2016, I was up 81%, I think, on the year in 2016. And that was sweet because that's when I was studying, carrying a super trader, and I didn't even have the hedge then. So I was just selling, baby. We didn't have macros, 10 times the size of the macros. So the macros let us do these trades more often and on a smaller version rather than doing just one MES or one ES trade once every 2 weeks or once a week. You do these micro trades, 3 times a week, once a week, 5 times a week, whatever you want to do. All right, so let's look at SPX and this saying, hey, what's my market opinion? I form it here. And if you're new and you don't know how to draw the big green monster, just look up Sweet Bobby. Very, very powerful thing we do. All right, so let's go and let's look at our SPX today, because this is how we use the skew driver. SPX. Matt, I'm glad you came in. Are you okay? What's up, Matt? Can you talk? There's the boss in the building.
Just living the dream.
Living the dream, baby. I hear you. Bobby, does TD Ameritrade have a better margining rate than Tastytrade? I noticed you trade both platforms. I'm not sure because I think it's probably about the same. We need to check on it, I guess, the next time I do it. What I forget, and both accounts have about the same types of trades. I prefer Thinkorswim because I can group my stuff. And that's why I'm trying to put the same trades in that other account, because I'll get lost over there, because you look over here and you go, what do I have my positions here, Luke? I can't group them. I don't know what the crap, one is or the other ones. I can't even see the historical basis of what I put some of these trades on. Like, I know I got to fill my 5 in my Black Swan hedge here, but I don't remember what I paid for it. It's, it's just a pain in the butt. So I prefer Thinkorswim, but let's sell our little put over here too. Okay. So let's do it over here and see how much margin it takes us. So let's do it again. So we'll go MES. Then we'll look at the other thing. What am I doing? Trade. Closest to 60 days without going over. We look for the 10 delta. Let's see how much buying power it'll take us over here. Probability of being in the money 10%. So around in here. Yeah, there's 1875. We'll take that one, sell that one. Buying power $1,400. Oh, Shimon, really? It's a lot. I am in the micros on it. Looks like it's taking more over here, doesn't it? Oh no, having trouble loading my feed. Let's try to put that one on. 91% credit. Unfilled. So it did look like that took a lot more buying power, didn't it? Let me go over here also and look at my positions again, options. See, and here's another thing over here. It's hard for me to tell. See, I got all this crap, right? I don't know what goes where with what. And it just drives me nuts. So I probably need to close this one. 26 days left. This has got a $52 profit. But see, it doesn't show me the percentage. I wish it would show me the percentage. And you can't do GTC orders over here on. So let's take our $50 and go to the house. Close position. But see, it's just harder. And I know they'll get better. I trust Tom and the team over here. They'll get better. So if I'm gonna buy that back, let's try it at 625. But it's harder for me to manage trades over here. It really is. All right, so let's see if we got our skew driver up and going now. I'll let that work for a while. All right, so what was I doing? Trade, SPX. I look at the one that's 30 days out. We don't have a 30-day out. So the September 3rd is 29 days. So that's the skew driver. And we've already got it on September the 3rd. Yay! So I don't have to do anything there. September 3rd, 29. There we go. So I'm looking at the yellow here and I'm trying to figure out the spread that is trading at $5.20 to see how far away from the market that it is. And so this one, hey, I got filled, yay. This one is it, and it's about, that's close to our 520, right? And it's about $36 out of the money. So then I'll go over here and write that down, 36. So today is the 5th, 8, 5, 21, and that number is 36. Now, y'all don't tell everybody this, okay? We don't want this to get out. What we're doing is you and me, lowly you and me, a head fake on when the market's going to go down big. Now, does this always work? No, but look at this. So earlier this week, it was at 36 away from the market, 33, 35, 36. What does this tell me? What does this tell me? Skew in the market is normal. I'm seeing normal market behavior. Now, if this number gets down to 15, so we come in here tomorrow and all of a sudden that one that trades at 520 is 15 for the market, guess what I'm going to do? I'm going to start closing my stuff for profits and I ain't selling no more. I ain't selling no more puts. So I'm using this as a tail in conjunction with this to make my trades and my market assumptions. Does it always work? Yeah, probably, but it's the best thing I've got. If you got something better, please let me know. But I'm telling you, price is fairly priced. It's above all 3 moving averages. We know none of this scares us. Even if you go one standard deviation below the point of control, that doesn't scare me. If we had to drop down to there, I'm selling put in SPX is telling me that I don't foresee, based on price action in the options, I don't see a huge drop that would be imminent. Now, if Joe Biden gets the, coronavirus or whatever, people panic over that, I can't control that. But as of right now, my decision is I can sell puts and be just fine. It's really fun. Shooting fish in a barrel. All right, anyone got any questions?